Hello students, I hope you all are doing well and keeping yourself safe, and once again come join with me to your class 11th accountancy online class. Well students, today we'll be learning a new topic, accounting equations. The meaning of accounting equation is an accounting equation is a mathematical expression which shows that the assets of a firm are equal to the sum of its liabilities and capital contributed by the owner. Thus, asset equals to liability plus capital. Now, in the previous online video class, we have learned the assets are all that you own, your property you possess, which helps you to earn in future, and liabilities are all those that you owe to others. That means you have to pay to your creditors, bank, you have taken loan, and capital is the money that you have invested in the business. And so accounting equation means that when you make your final balance sheet, all the amount of your assets should be equal to the combination of your liabilities and your capital. An accounting equation is based on the dual aspect concept of accounting, which says that every business transaction has two aspects, a debit and a credit of equal amount. Now, the accounting equation is based on dual aspect concept. Now, the meaning of the dual aspect concept is when you have two transactions. One transaction has two aspects, like you are buying a car, so the car, which is a worth of 5 lakh rupees, is coming into you, and you are paying 5 lakh rupee to the shopkeeper, which is going away from you. So this we will learn further when we learn the journal entry. You just know now that accounting equation has got two aspects. There has to be a debit and a credit of equal amount. Okay, and we'll learn the journal entry. That time we will learn what is and how we have to do debit and credit. So you have to wait for that. Now here is an example of a simple balance sheet. T form is given below. So here you can see a simple balance sheet, a T form balance sheet. On this side we have got capital and liabilities, then we're writing the amount for capital and liabilities in this column. Then we have assets here, all the assets that you own, and roughly we're giving a amount over here. So capital is the money that you have invested, that is around 60,000. Then liabilities, we have taken creditors and overdraft that you have to owe to others, you have to pay them 20,000, 20,000, 40,000. Then we just took some examples of the assets. Cash, debtors are your assets because from them you will get money in future. Stock, furniture, machinery, building, all this helps you to earn money in future. So we have just written a assumed amount, and here when we total this, it is coming to 1 lakh, and when we total this, it is coming to equal as 1 lakh. So here we have got the accounting equation proved that the capital and liabilities should equal to your assets. So capital liability total is 1 lakh and asset total is 1 lakh. Now let us look into the usefulness of accounting equation. By now you must have understood that in accounting equation all your capital and liability should be exactly equal to your assets. The first one here we have is basis for double entry system of accounting. Accounting equation is the basis of double entry system in accounting, which states that every transaction has at least two accounts. If one is debited, any other account must be credited with an equal amount. Now, we will be learning about double entry system in the coming videos, in the coming online class. Just you understand there are rules of doing accounting, and out of one of the rule we said that every transaction has got at least two account, one debit and one credit. So let us take one example. You want to buy a scooty, or you want to buy a bike that is for, let us say, 60,000 rupees. So what is coming into you, what is coming inside, or what comes in the bike or scooty, and you are paying cash. So what is going out is your cash, rupees 60,000. So there are two things happening. One hand, the bike is coming to you, and the other hand, cash is going out from you. So what comes in, we have to debit. So bike will be debited, and what goes out, the cash 60,000, will be credited. Okay, but we'll write bike 60,000, and with the equal amount we will write to cash. On the credit we'll write 60,000. So there are two accounts, bike and cash, both will be with credited and debited with an equal amount. Basis for balance sheet. It is because of accounting equation that the two sides of the balance sheet are always equal at any point of time. Total assets of firm are equal to its total liabilities. Just now we just saw the formula that, and we saw the T form balance sheet, that the total of the assets of the firm are equal to the total of the total liability of the firm. Ensures the accuracy of accounting work. By the use of accounting equation, the accuracy of accounting work can be established because accounting equation always holds true with every change that occurs due to transaction entered. So the accounting equation, it ensures the accuracy of accounting work. How can you say it shows the accuracy? Because the accounting equation will be true with every change that occurs during the entry you do in the books of account. Like if there is a debit, with equal amount there will be a credit. So there will be a true change will occur in the transaction. Now let us have a look back into the usefulness of accounting equation. The first one we said was basis of double entry system of accounting. The second one, basis for balance sheet. And the third one, ensures the accuracy of accounting work. Next topic is meaning and objectives of accounting. Meaning of accounting. Accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting and results thereof. This meaning has been given by American Institute of Certified Public Accountants. Now let's look into the characteristics, features or attributes of accounting. Accounting is an art as well as science. Accounting is an art of recording, classifying and summarizing business transactions with view to ascertain the net profit and financial position of the business enterprise. Any organized body of knowledge is based on certain principles is called science. In this respect, accountancy is also a science since it is also organized body based on accounting principles and standards. So accounting is the art of recording, classifying and summarizing. Therefore, we call it as an art because you record your transactions in your journal, then you classify it into different groups and put them into ledger, which we will learn in detail in further, and then you find out your net profit or loss and your financial position, and it is called as a science because it is an organized body of knowledge based on accounting principles and standards. Second, recording of financial transactions only. Only those transactions and events are recorded in accounting which are of financial character. There are so many transactions in the business which are very important but which cannot be measured and expressed in terms of money, and hence such transactions will not be recorded. So, in the characteristics of accounting, we record only those transactions which can be measured in terms of money, which are important to the business but cannot be measured in terms of money will not be recorded in the accounting. Like for example, if because of a internal problem there might be a lockdown or strike that has been done by the workers, or maybe the experienced manager has resigned, so these things cannot be measured in terms of money. These loss cannot be measured in terms of money, so such kind of event will not be recorded. Recording in terms of money. Each transaction is recorded in the books in terms of money only. Example, if a businessman purchases 20 tables and 80 chairs and records them in absence of money measurement concept, these cannot be added up to give any useful information. But if they are expressed in terms of money, they will immediately provide useful information such as tables rupees 20,000 and chairs rupees 32,000. So here, if you bought a table, 20 table and 80 chairs, and you just wrote in your book 20 table and 80 chairs without any money measurement concept, so this will not give you useful information about your finance. So what you recorded, tables are for rupees 20,000 and 80 chairs are for rupees 32,000. In small business, they record first in the journal, they debit and credit, which I will tell again that we will learn in the coming online class. But the big business, where the transactions are quite large, they divide the journal into various subsidiary books, which we will learn further again. Classifying. After recording the transactions in journal and subsidiary books, the transactions are classified. Classification is the process of grouping and the transaction of one nature at one place in separate account. The book in which various accounts are opened is called ledger. Okay. In simple word, we can say that we are grouping one kind of thing in one house. Okay. So here, like all the sales that you have done, you'll put in sales account. All the purchases you have done, you'll put in purchase account. Whether you have done it from Mr. X, Mr. Y, all the cash you have received or given, you will put in cash account. It doesn't mean from where it is coming and to whom you are giving. So you just classify the separate accounts of the transaction of one nature at one place. Summarizing. Summarizing is the art of presenting the classified data in a manner which is understandable and useful to management and other users of such data. This involves the balancing of ledger accounts and preparation of trial balance with the help of such balances. Final accounts are prepared with the help of trial balance, which includes trading and profit and loss account and balance sheet. Now, after classifying each into different specified place according to their nature, cash account, all the cash in out, sales account, all the credit and all the cash sales from whomever to whomever you're selling, to Mr. X, Y, A, B, C, it doesn't matter. Purchase account from whomever you're purchasing on credit or on cash. So all these are finally summarized and put into a useful information to the management. So all the balances of the ledger account that comes in the end, all the balances of the ledger account are transferred into trial balance, and with the help of trial balance, we make the final account, trading and profit and loss account, to find out our net profit or net loss, and then finally we make our balance sheet. Recording, classifying and summarizing are also termed as process of accounting or accounting cycle. Next characteristics we have is interpretation of the results. In accounting, the results of business are presented in such a manner that the parties are interested in the business, such as proprietors, managers, banks, creditors, employees, etc. They have full information about profitability and the financial position of the business through results such as trading and profit and loss account and balance sheet. So now the result which is given in form of the balance sheet, trading profit and loss account, it helps the interested groups who are in the business, such as proprietors, managers, creditors, employees, and they get the full information about the profitability and the financial position of the business. Communicating. Accounting attributes also include the communication of financial data to the user who analyze them as per their individual requirements. So here, when the accounting has been prepared, it not only helps you to interpret the result, but it also gives you the information or communicates the information about the financial data to the different users as per their requirements. Like when the bank has given you loan, so they might get this information communicated, what is your financial status right now, that further if the loan can be given to your business or not. If the creditors are giving you goods on credit, if they are supplying you goods on credit, your financial information will communicate them with an information whether will they be ready to give you goods on credit on future dates. It will give information, communicate information to the managers about the progress of the business. So these are some of the characteristics of accounting, what we say features or attributes of accounting. Now let's have the look back into all the characteristics or attributes of accounting. Characteristics, features or attributes of accounting. First one we learned was accounting is an art as well as science. Second, recording of financial transactions only. Third, recording in terms of money. Fourth, classifying. Fifth, summarizing. Sixth, interpretation of the results, and the seventh, communicating. Now we'll look into the objectives of accounting. The first is to keep systematic record of business transactions. The main objective of accounting is to keep complete record of business transactions according to specified rules. For this purpose, all business transactions are first of all recorded in journal or subsidiary books and then posted into ledger to avoid the possibility of omission and fraud. So, when you do the accounting entry, it should be done in a systematic manner. First of all, it should be recorded in journal or subsidiary book. We call it as the first place where you record. Like you have bought 10 bags of rice for rupees 1000 each on August 1st, but you missed it out. You omitted it. You forgot to record it. And then when you're making your ledger, the true amount is not been, or true position of your finance is not coming because you have omitted to record in the journal, and because of that, what is happening? Your trial balance is coming wrong. And so there has to be a systematic record. First it should be recorded in the journal and then posted into the ledger to avoid any possibility of omission or fraud. Second, to calculate net profit or net loss and to know its exact reason. The second main functions or objective of accounting is to ascertain the net profit earned or loss suffered on account of business transactions during a particular period. For this purpose, trading and profit and loss account of the business is prepared at the end of each accounting period. When total expenses are less than total income of the business concerned, it results in profit. And when total expenses exceeds total income, it leads to loss. This information can be used for taking effective measures for cost control. So here, when you do the accounting record systematically, you will be able to prepare your trading and profit and loss account at the end of the accounting period based on your trial balance, and the trial balance will be recorded with the help of your ledger balance, and your ledger balance will be recorded with the help of your journal. So systematic journal, ledger, trial balance, then you prepare your final accounts, trading and profit and loss account. So if you find all your expenses are less than your income, you're earning profit, and when all your expenses are more than your income, then naturally it leads to a loss. So here you can know the exact reason where your expenses are increasing, where to your cost and control it and earn more profit. Next, to ascertain the financial position of the business. The aim of showing financial position can be achieved by preparing balance sheet of the business enterprise. The balance sheet is a statement of assets and liability. The resources owned by an enterprise is asset and claims against such resources is liability, are shown in the balance sheet. A balance sheet is actually a screen picture of financial position of the business. So we have seen the T form of the balance sheet, the picture of the T form of the balance sheet. So here the financial position of the business we can find by getting all the balances of the assets on one side and all the balances of the liability and the capital on one side, and then finally balancing the balance sheet and coming to know what is our financial position of the business. To provide information to various parties. Another main objective of accounting is to communicate the accounting information to number of other users who may be interested in knowing the information about the financial soundness and the profitability of the enterprise. For example, shareholders are interested to know the amount of dividend declared by the enterprise or earning per share. Lenders are interested in the safety of their loan and interest paying capacity of the business. So the accounting not only gives information to the owner and the manager themselves, but it also gives information to those who are attached to the business from the external people who are attached with the business, like shareholders. Shareholders are those who buy the shares of the business and invest money in the business and give finance for the business. Okay, so here the shareholders will need the information to know about how much is the dividend that he or she will get and how much will be the earning from the per share, or any lender like bank, creditors, if you want to take loan from the bank. So this information of your financial status will give the information about what is the capacity of paying interest when you take loans from the bank. Now let us look back into all the objectives that we have seen. The first one was to keep systematic record of business transaction. Second, to calculate the net profit or net loss and to know its exact reasons. Third, to ascertain the financial position of the business. And fourth, to provide information to various parties. Now let us look into the need of accounting. At the end of each year, all businessmen want to know how much they have earned or lost during the year. How much capital is invested in the business, how much are they liable to pay and to whom they owe it, how much is owed to them and by whom, etc. So here at the end of each year means end of each financial year. So either you can start from January and end the financial year to December, or you can start from 1st April and end your financial year to 31st March. So the businessman at the end comes to know how much profit they have earned or is there loss in the business, how much capital they have invested, and to whom are they supposed to pay, owe, and from whom are they supposed to get money. By keeping a complete and systematic record of every business dealing in the businessman can know how much is the amount of purchases and sales, what are the total expenses, etc. Besides, properly maintained accounts are helpful in assessment of income tax and GST and are accepted as proof in the court of law whenever needed. So when the businessman keeps the complete and systematic record of all the dealing transaction that has been done, they can know how much purchase they have done, how much sales they have done, how much expenses they have done, and if they maintain all the accounts properly, it will be helpful for them to assess or to get the correct income tax amount and the GST, and in future this can also be shown as a proof in the court of law whenever needed. Nowadays, properly maintained accounts also give the answer of number of questions such as what is the cost of production, what should be the selling price based on cost of production, etc. So here not only it gives you information about the profit and loss, to whom you have to give money, from whom you have to receive money, but it also helps you to find out what is the making cost or cost of production and how can you reduce your cost of production, and based on that what should be your selling price. If your cost of production is 2 rupees, you cannot keep your selling price at 1 rupees, right? You have to keep more than 2 rupees. So it can give you more better informations, and therefore accounting is needed. I hope you all learned the accounting equation and the meaning and objectives of accounting, and further we will learn functions of accounting and the difference between some terms like bookkeeping, accounting, accountancy, and then I know you're waiting for learning the journals, but before that we have to learn the theory. And thank you for watching.